If you can go now.
Hi, thank you so much for joining us this morning. My name is Soka Yus, and I'm a financial wellness counselor here at Mayo Employees Federal Credit Union. And today we're going to talk about getting started in your 20s. My name is Soka Yus, and I'm a financial wellness counselor. This is my contact information. So if you need to reach out afterwards with any questions after the presentation, please feel free to do so. So today we're going to be talking about where to start, building your savings, importance of having a budget, debt management, renting versus buying a home, marriage and money, finances and starting a family, and planning for the future, such as paying off student loans, which is a big topic right now, excuse me, retirement, and planning tools. So where do you start? So getting started in your 20s, you recently recently graduated from school and just started to build out your financial plans. So what are some of the most important things that you should have when, as far as financially? So you want to have a savings such as emergency savings. You want your long-term savings goal and your short-term savings goals. We're going to talk about budgeting and how budgeting can play a large role into that. We're also going to talk about debt management, because when you're trying to save for your future, you don't want any debt just lingering around because of the interest rate, and it's going to cost you more money each month as well. We also want to talk about future planning. If you plan on buying a new vehicle, home, or want to get married, because that's if you want to have a wedding. The average wedding right now, I think it's about $30,000. And starting a family is not cheap, and also retirement as well. And also some of the resources that we offer here at Mayo Employees Federal Credit Union. Now, building your savings, why it's important? Because it creates, it gives you a sense of security. So in case something happens, you know that you can always turn to your savings to pay for this or that. So we want to go ahead and have a few different categories of savings. We want you to work on an emergency savings plan. For example, we want you to have, ideally, we want you to have about 3 to 6 months of emergency living expenses. So in case anything happens at all, you don't have to use your credit card or try to get a loan to pay for those events, because that will put you further into debt. And we want to, so it's important to have savings because it keeps you out of debt. So we just talked about that. It allows you to reach your financial goals. Like I said, you should have three sources of savings. You should have an emergency savings, which obviously you don't touch. You should have a short-term goal savings, such as, trying to put down a down payment on a vehicle or paying off a small credit card. And a long-term goal should be trying to buy a house, so saving for a down payment for a home. And we're also going to talk about how to save money and how to budget, automate savings, and setting goals. And the first things you want to do when you set a budget is to go ahead and take a look at your expenses. You want to evaluate how much you spend each month, how many bills are going in and out of your checking account, how many checking accounts you have, how many credit cards you have, and how much you're trying to save by what time frame. And so we want to put in one spot your source of income, how much it is on all your expenses, all in one sheet. And you want to go ahead and understand how to build healthy financial habits right now. And so when you're starting your 20s, you're going to start with new habits. And you want to start with automated savings right away. So that's the easiest way to save your money. You can have money from your pay stub, or from your paycheck directly deposited into your savings account, and half of it, or you can have half of it go to your checking account as well. It doesn't all have to go into your checking account. So that's an easy way to automate savings as well. A plan for upcoming expenses. So when we talk about short-term goals, if you want to go to move to, let's say, in 6 months, you want to save money for Christmas time, or move to a different, have a down payment for an apartment, that would be short-term goals. So we want to go ahead and say, by December 25th, or by December, I want to have $1,000 for Christmas. So you would take that $1,000 divided by how many months we have left until your end goal date, and then you just have to, and then that will give you an idea of how much you need to save per month and also per paycheck as well. And for long-term goals, if you're trying to pay down your student loans as fast as possible, we want to go ahead and put that in your budget as well, and see when your end date will be, your goal of your end date, and how much you need to put towards each month. And again, if you're trying to build your savings account for your first home as the down payment, then you want to say, in 2 years, I want to have $40,000 available for a down payment. And you would take that $40,000 divided by however many paychecks you have, and then you're able to save that amount per paycheck. And do you have enough set aside for emergency expenses? So for example, if you want to, I think the national average right now, I think it's about 60% of Americans can't cover a $400 emergency expense without using their credit card. So if you have some sort of emergency that happened and you can't use your savings account, your emergency savings account, then you use your credit card, then that's putting you further into debt, and we don't want that, especially when you're just starting out. An importance of a budget, it makes you aware where all your money is going to. It helps you control your spending and your savings. It gets you started towards your financial goals and keeps you on track as well. Also keeps you organized, especially if you just have it in one notebook or one Excel spreadsheet. Can get you out of debt and avoid future debt. So if you have some credit card debt that you want to pay off within 6 months, a year, 2 years, you can all put that down as short-term or long-term goals, and you can break it down at how many more payments you want to, how much you want to pay per paycheck towards that debt as well, so you can see exactly where all your money is going to. It makes it easier for you to save money, and it's kind of put down in black and white what's necessary, what's needed, and what's wants. So necessity would be like food. So you need groceries to eat to survive, but wants would be going out to eat, 5-6 times a week. So it helps you determine, is it really worth it spending this much money going out to eat versus buying groceries and cooking at home? So do you have a budget or debt repayment plan? It helps keep your expenses low. Know what you spend. So you want to review your statements. You can do that every week. If you're a couple, you can have a Finance Friday. You can have a date on Finance Friday and go over your expenses and talk about your upcoming expenses as well, and set a budget for each other. And you can categorize expenses. So for example, if you want to set $100 just for personal care, like getting your nails, hair done, or then at least you know that that $100 goes towards that, and it won't touch your bill money. It won't touch your internet expense money, so you can categorize your expenses that way. You want to set goals. Again, goal setting, financial goal setting is very important. And you want to be able to track your spending as well. And you want to take accountability. So if you need someone to check in, you can have like a budget buddy. So it's just something I made up, but you can have a budget buddy that if you set, say, listen, I need you to kind of help me hold myself accountable, that if I'm eating out too often this week, I want you to kind of nudge me a little bit and let me know to slow down on my spending, or if I'm going, I'm spending too much on Amazon or whatever your vice is. So, and debt management. The importance of paying off debt, it absolutely improves your credit score. So of course, the less debt you have, the better your credit score is. And it also reduces stress as well. So if you're trying to save money, you're trying to save for your future, and you have all this debt weighing you down, that's going to cause a lot of stress. So you don't want to do that. Increase your ability to build savings and saves more for retirement investment funds. So it's really, really important that you set financial goals. Again, the key here is setting financial goals. So we know exactly what you need to do, when you need to do it by, and how much you have to pay per paycheck. So that should help it out. And create a budget. Again, creating a budget is very important as well. So if you need help creating a budget, you're more than welcome to reach out to me. We can set that up together. Ways you can pay off loan, or ways you can pay off debt. You can talk to us about getting a loan, or refinancing your car, your home, or doing a balance transfer from one credit card to another. If a credit card has a 0% interest rate, you can probably transfer a balance from a higher interest rate credit card to the zero balance, or the 0%. You can borrow from family and friends, or get a second job. It's a gig economy. You can, start door dashing the same day you sign up for the app, or whatever other gigs you wanted, work for. So that's another way of getting extra money as well. And now we're going to talk about renting versus buying a home, the pros and cons of it. So the pros of renting, you have fewer upfront costs and fees, freedom to be more mobile, not responsible for maintenance and repairs. So those are always good things. So that way you don't have to put money up front into your, if your furnace breaks in the middle of winter, you don't have to worry about getting someone out there and having to pay, a couple $100s or a couple $1,000s to fix it. The cons will be landlord may raise the rent, as we know. That's a big topic these days too. That rent's really high, pretty much across the country. It builds equity for the landlord, but not for yourself, and there's no tax benefits. So. But sometimes if you're just starting out, renting might be a lot easier as well, because if you're just coming here to go to school and then you know that you're going to be moving out to California, there's really, if you think that it's just a lot easier for you to rent an apartment here without having any ties when you move, then, that might be your pros there. And also, marriage and money. So financial decisions around wedding budgets will affect couples for years. Like I mentioned earlier, a lot of weddings now are costing about $30,000 to $40,000, and that's a lot of money to start out, and a lot of debt to start out your married life. If you choose to put that on a credit card, or if you decide to get a loan, or if family and friends are helping you, or if you're saving in advance. So it's really important on how you want to pay for that wedding. You want to talk about that in advance. So if you want to get married in a year, you want to spend $30,000. You only want to get a loan for maybe $10,000, so you have to save up $20,000 for the wedding. Then you can take $20,000 divided by the 12 months and see how much you have to save for 12 months. You have to talk about money, marriage and taxes. So there are some tax benefits to getting married, but that's something for you to consult with an accountant as well to see what all those tax benefits are. You can set joint financial goals. You can have your own individual goals, but you can also have joint financial goals as a couple as well. So if you want to buy a house together in about 2-3 years, then that would be a good long-term goal to add on to the list. And should you join accounts, such as should you join your checking account, your savings accounts, your retirements, or how do you want to do that? It's up to your personal preference. So some people, a lot of couples that I see nowadays in the millennial Gen Z generation, I'm typically seeing separate accounts, because people just want to do their own thing without having to explain to their partner what they're spending their money on, which is completely understandable. So they usually have their own checking account, and they have one joint checking account for the household expense as well. So it's whatever is more comfortable for the couple. And so sharing financial responsibilities, again, that's something that's really, really good to start talking about before you get married, because you want to know how much of rent you should be paying, or how much of mortgage you pay for each person, and or if you should buy a vehicle together, and who pays for the internet, who pays for the groceries this month and the next month, because money fights are I think that's the number one reason why couples break up is money fights. So it's really important that you talk about that before you get married. And maximize your retirement investment. So again, we have a great team out here, Cetera, who's able to help you out and talk to you about your future investment goals and retirement goals. If you, as a couple and as an individual as well, so if you want to talk to them and how much you should invest in as an individual and as a couple as well. And finances and starting a family, so you should always budget to start when you're starting a family. It's very expensive, so you have to think about the medical deductibles for the hospital, during the birth or the adoption, however you choose to go about it. And also how much you want to spend on daycare, because that's as much as a mortgage for a lot of people. And plan for how much you're going to spend on family leave. So if you are taking full 12 weeks of FMLA, family medical leave of absence, sometimes that full 12 weeks is not completely paid, but 6 weeks of it is. You can take short-term disability for 6 weeks, but then what are you going to do for finances for the rest of the 6 weeks that you're going to be out, and who's going to be out, and how long you're going to be out for. So it's something to discuss as well. And you want to reevaluate your emergency savings plan. So if you're going from a single person, your monthly expenses are much less than you as a couple. And then as a couple, your expenses are much less than you as a family when you start having kids. So you want to increase your emergency savings plan. Plan for your child's education. What kind of daycare they're going for? What kind of, if they're going to pre-K, kindergarten, how much is that going to cost you now and in the future if you need to start like a 529 plan for the kids? And that's something that, again, please come in and see us if you have questions about that. And we'll be more than happy to talk to you about your kids' college plan. Savings for a kids' college plan. Adding newborn to your health care plan, that's really important. So then your insurance premium will increase because you're adding a family member. Instead of a single person, you're adding a family with a kid to your health plan. And you can talk to your tax advisor about child and dependent care tax breaks. And of course, update your life insurance and estate planning now that you have kids. That's really important too. And planning for the future, what can you do right now to positively impact your financial future? You can stay on top of your budget. Always stay on top of your budget to create one. If you have not, if you need help with it, again, reach out to us and we can help you out with that. You have a plan to repay debt if you have any debt. Set savings goals with timelines. And check your credit score and work to improve it, because the lower your credit score, the higher interest rate you're going to get on loans and stuff if you need that later on. And prioritize your expenses to build more room to save. So again, that goes towards the wants versus needs. And student loans. So we're your private student loan resource. We have competitive fixed and variable rates and flexible terms. So if you are already done with school and entering repayment, you might if you want to come talk to us about getting student loan consolidation loans, consolidating your student loans, please reach out to us so we can help you with that as well. So. In retirement, planning for retirement, we're here to help you with complimentary advisory services. That includes traditional and Roth IRAs, who are insured up to $325,000, retirement planning. Interested in alternative options, you're more than welcome to reach out to us so we can set you up with, as a Terra advisor or one of our member services representatives to talk about that. We also offer digital banking here at MEFCU. We offer you can have free mobile deposits, which is very convenient, digital wallet, free bill pay, and person-to-person transfer, and of course access to your e-statement so you can keep track of your spending and make sure that there's no fraudulent activities and stuff on there. So if you need additional financial planning tools, you can actually visit annualcreditreport.com to review your credit report. If you have a hard time logging onto that, please reach out and I can help you with that. Or if you have some fraudulent activities on there, you need help just reading or figure out what's on your credit score, please let me know as well. So to find more financial resources, you can go to our website and you can meet with me or one of our investment advisors. So we can talk to you about budgeting tools and stuff as well. We also have a budgeting tool on our website. Go ahead, Seth.
Yeah, question. Can you go over what are some of your favorite financial tools online, such as like budgeting apps?
Oh, sure.
You mentioned annualcreditreport.com. Like, what is a quick checklist in your mind of things that everyone should be aware of and use monthly, if not weekly?
Yeah, so our quick budgeting tool is, we have it on our website, so that's a good one to use as well. But you should always review your credit report, annualcreditreport.com. You can do that once a year for free. But don't pay for your credit score because there's so many, it's a few different scoring models that if you pay for your credit score with, let's say, with annualcreditreport.com, it might not be the same model that we use here with MEFCU, so it might just be a waste of money. But do review your credit report. So that's, a website that I use once a year. But I log on to our e-statements once a day just to make sure everything that I, set up is being sent out, or if I, just to make sure that everything that I spent is showing up on there either that day or the next day. So it's really important for you to keep track of your spending, especially, these days when things are kind of going fast, but there are certain transactions that are a little slow as well. So you want to make sure that, let's say you have a scheduled payment for your mortgage to come out today, but you completely forgot and you spent an extra $300 on a shopping spree, and you forgot that you had that mortgage set up to go out today. then at least you know that you have to add more money into your account to make sure that it covers that expense. So it's really important to review your bank statements every day, either online, on our website or through our app as well. Okay, so those are some good ones. Do you have any more questions?
Yeah, another question. The big topic right now, as you'd mentioned, is student loan things. What are the benefits of consolidation? What does that mean?
Yep.
Why is that beneficial?
Sure.
Should I do it?
Yeah, that's a great question. So with student loans, for example, if you currently have, let's say, Nelnet, and typically you have more than one student loans. So you have, let's say, the average is about 7 or 8 student loans. Let's say 8 student loans. So each student loan itself is going to have a different interest rate. So it's really important that you know how much your interest rate is on each student loan. So if it comes out to maybe $40,000, but it's $40,000 for 8 different student loans, and you're paying for all these different interest rates. The consolidation means that you're going to consolidate all your $40,000. You're going to get it under one loan, under one interest rate. So you just have to pay, Lenke, which is our student loan provider. You can just have to pay them one payment with that one interest rate, and it pays down your your student loans a lot faster. So that's something to really look into. And if you have more questions about the loans and stuff, you're more than welcome to reach out to us, and we can go more in depth about your personal situation with the student loans. So we do have another student loan presentation coming up after this, so you're more than welcome to jump on that one. We can go into details, a little bit more details about that one. Okay. That's it? Okay, perfect. All right. All right, again, if you have any questions, please reach out to me. This is my contact information, or you can just call our phone center. You can ask to speak with a financial wellness counselor. And if you have any other questions, you're more than welcome to email us afterwards as well, or we can meet after that. Go ahead, Seth.
I was just going to say, anything else that you're seeing with people you work with, like is it student loan related things? Is it more housing issues, budgeting things? Like what's the biggest takeaway you'd like everyone to know about today?
Yeah, so mainly budgeting. So the budget is the basics of how successful you're going to be with your financial goals. And I want to set financial goals right up there with budgeting, because if you are just, going from paycheck to paycheck and you don't really have any goals, then you're going to spend your money paycheck to paycheck and not really know what you're going to do with it. But if you set financial goals, whether it's a short-term goal, say, I want to save $1,000 as a, initial start of my emergency savings plan, and I want to save $1,000 in 5 months, then at least you know that you have those budgets, that short-term goal to reach. And if you have a short-term goal, saying, you know what, next year I want to buy a new vehicle, but I want to go ahead and put down maybe $10,000 by this time next year. So at least then you take that $10,000 and you divide it by, the 12 months you have left, and that'll be your, short-term goal, another short-term goal as well. But then you have this large student loan, that you're trying to pay off, and let's say it's like $40,000 or $50,000, and you want to go ahead and pay this off within 5 years. Then you want to see how much more you can, if you need to consolidate your loans with us, to get a lower interest rate, or where it's just more convenient for you to pay to one spot, or if you at least then you know what you need to budget for. So budgeting is really important when it comes to having complete control over your finances, and also how much you know how much you need to pay towards housing. If you're paying too much, then you know that you can try to find cheaper housing. Or when you go start your budgeting journey, you can see that you're spending way too much money on personal care, that you don't need to get a massage once a week. Then you can cut it back a little bit to save more money. Or if you realize that you don't really have enough emergency savings plan, then that's something to work towards too. So I would say from this presentation, it's really important to set financial goals, and it's really important to have a budget to reach those financial goals. Anything else, Seth?
You'd mentioned Cetera, like with advice. Can you go over what all their services are, what they do, how much do they charge?
Yeah, so Cetera is actually our partner, and I mean they're in the Cascade building with us here, and they're fiduciary advisors, which means that they have your best interest in mind. So they are. It's free to meet with them. You can meet with them individually or as a couple. And all you have to do is just reach out to them, and they're one of their administrative assistant will go in and schedule an appointment for you so that we can talk to an advisor and kind of review what your long-term financial goal is. So for example, when do you want to retire? What do you want your retirement to look like, and how much you need to save between now and retirement, and what you need to move around and stuff. And if it turns out that maybe you need to pay off your debt first to start retirements, to start looking at retirement goals, and they'll probably send you back to me to go ahead and work towards a debt repayment program. The best thing to do when you want to start a retirement, long-term retirement program with like that with Cetera, you want to make sure that your debt is as minimal as possible, because you can't really, like I said earlier, you can't really save for the future if you have a lot of debt weighing you down. So it's really important to review your debt, know exactly where you're sitting at, and then you can more than welcome to talk to our advisors as well. So even if you're unsure, still go ahead and reach out to them so that way they can send you over to the right location, or if they can, help you out with long-term goals there. Okay. All right. If you don't have any other questions, thank you so much for being with us today, and I hope you join us for the student loan presentation here